Welcome to Just Minding My Business Radio, where we are moving at the speed of God, learning what we didn't know we didn't know. I'm your host, Ida Crawford, so grab a pen and paper and get ready for information that you can use.
Welcome to Just Minding My Business Media, LLC. Broaden the scope of exposure for your business by going beyond the interview. Learn more at www.jmmbmediallc.com or email us at jmmbradio@gmail.com. Beware of small expenses. A small leak will sink a great ship. Benjamin Franklin. Chris Miles, the cash flow expert and anti-financial advisor, is a leading authority teaching entrepreneurs and professionals how to get their money working for them today. Chris has used his knowledge not once but twice to become financially independent, where his passive income exceeded his expenses, not to mention paid off his $1 million in debt after the last recession without filing bankruptcy. He has been featured in U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and has a proven reputation with his company, Money Ripples, getting his clients fast financial results. In fact, his personal clients have increased their cash flow by almost $300 million in the last 12 years. Well, welcome, Chris. He is here to tell us all about it and how he did it.
Pleasure to be here. I'm glad to be able to share whatever I can.
Yes, welcome, and how on time you are. Because everybody is struggling, things are getting higher, not lower. And sometimes in order to get through it, you got to use a credit card. You got to make a bill because you just don't have the cash flow to pay cash. So tell us all about how we can get free.
Well, yeah, as you heard, I mean, I came out of $1 million plus debt hole, from the last recession. So I get it. Even when people hear like, oh, how'd you retire twice? Well, easy. I screwed up the first time. That's why I had to do it a second time, right? And that's the thing is that you're right. Cash flow is everything. It really is about what's coming in per month versus what's going out. And the problem is that so many people out there, and I know I used to be a financial advisor 20 plus years ago, and I taught all the same old crap of save everything, spend nothing, save it forever, and hopefully someday you have something, right? But the truth is this, is that it's all about how much income is coming in versus what's going out. And you don't have to live on rice and beans. You don't have to be a cheap son of a gun to try to make ends meet, by cutting out all joy out of your life and, just living super duper cheap. You don't have to do that. If you're going to spend on things that really make sense, but it's got to focus on the cash flow. First step I recommend to do that is start tracking your money. That was one thing I forgot before the last recession. Money can be like air sometimes. When you have so much of it coming in, you kind of stop counting the number of breaths you have, right? But when all of a sudden oxygen is limited, you don't have enough air, you're counting every single breath. And money's no different. When there's a scarcity of it, all of a sudden, that's the point you're trying to count your money. Wouldn't it be so much better to start doing that beforehand? So a great tool you can use if you're in business, obviously, using tools like QuickBooks. Even though I know it's boring and I mean, it only gets your accountant excited. And that, trust me, accountants getting excited look like this. They really are. They look excited, right? Even if they don't show it, they really are. But I mean, using QuickBooks for your business, which is a good, easy way to do it. And then even for personal, a good free tool to use is Mint. I like using Mint, M-I-N-T, because, it's same company that uses QuickBooks, but it's automated. I like things easy. I'm as an entrepreneur, I'm ambitiously lazy, meaning I like to work hard so I can play hard. Or can I use systems so I don't have to work so hard anymore, right?
Right.
And Mint's great because instead of using like an Excel spreadsheet, which you could do, or trying to track it by paper or however you try to track money, it's so much nicer to know that all of your transactions get downloaded into one place and then it categorizes it for you. Because here's one big mistake everybody makes. Everybody's been telling you to live on a budget, right? Create a budget. But you can't create a budget until you know how much you're spending.
Right.
Otherwise, it's just ridiculous. And so the best thing to do is start tracking your money. How much is coming in? How much is going out? And just watch it for a matter of 3 to 6 months, or at least go back far enough so you have at least 3 to 6 months worth of data. And then once you have that, you could say, okay, cool. I can see here because Mint tells me on average the last 6 months, I've been spending blank number of dollars per month on gasoline, or on blank number of dollars a month on food, or whatever it might be, especially the things that are more variable. You really don't know what they are. Find out the real information, because the reason that people fail on budgets isn't because they shouldn't have, what I like to refer to as a spending plan. I hate the word budget. So I like to say spending plan, because money is meant to be spent, even if it gets spent into savings. But many people don't realize that they don't know how much is going out. And so they set this weird number off, they pull out their butts, basically. They set this number and then they hope that it's going to work out. And the truth is it doesn't. And then they say, well, budgets don't work. Oh, well, I failed. Stop. No, just start tracking your money. And then as you get more and more time and knowing how much you're actually spending, on average per month, then you can set that, that spending plan type of limit or whatever it might be, and figure out how much cash flow you really have, and then work from there. Again, just tracking your money is big. Give you examples. I had one entrepreneur. She's like, I'm too busy. I'm too busy to do it. She's a graphic designer. She's like, and she's one of those like fast paced people, like always go, go, go. And I said, listen, just take some time and do this. And for her, it was like going to the dentist. She didn't want to do it, but she eventually did. And guess what? She found $1,800 a month. Not even have to cut out her lifestyle. Didn't have to do anything. It was just money that was being lost in like subscriptions that she wasn't using anymore, or stupid cable, which now we have streaming services that you could do for much cheaper, right? And all these kind of things that we're spending on, just little bits added up, and saved $1,800 a year, or sorry, $1,800 a month. That's almost about $22,000 a year she saved herself. That's awesome. That's like getting a raise.
That's
We like that.
Absolutely. Wow. Wow. And you're so right. I mean, even though I have Mint, but I also have a notebook that I write down everything that we spend, and have been doing it for years. And the notebook works for me because it's right there. I'll say, spent this amount on food, because what made me start doing it is I share a checking account with my husband. So while he was spending money, I'm spending money. I don't know what he's doing. So I'm like, oh no, you're gonna write this in the book. Every time you spend a nickel, put it in this notebook. And I got like tons of notebooks that over the years from doing that. And you're right. Documenting what you're spending gives you a great picture of what you're spending. Because some money you spend, it's like poof, you don't even realize what's going on with that. So
it's true.
That is a great idea.
Yeah.
And that's a great thing. I mean, because you probably like taught like I was about money, using the check register and balancing your checkbook and things like that, right? If you remember those days, which really we don't do anymore, but it's good. I mean, now the one thing I always had a problem with is I had a hard time with the small expenses, like the food expenses that came out on a regular basis, or the gasoline. And so I'm trying to put in the calculator, tally it all up, and then I get lost on which number I was on. I was like, oh, clear. All right, start again from the beginning, right? And that's why I started using Mint personally for myself. But like my wife, she doesn't like it. She hates Mint. She's rather just use her Excel spreadsheet and just tally it all up and then put it in the cell. And that works too. Whatever ways the point of least resistance for you to at least do the habit, that's what really matters.
Yeah.
One thing my wife actually taught me that was really creative is she basically put me on a little extra account, because sometimes I go and I get a few tacos or something like that, right? And she's like, oh, and of course she's using the calculator. She has to add up all these little stops, or grocery visits or whatever it might be. She just said, you know what, Chris, I'm going to put you, I'm going to basically give you a allotted amount. I'm basically going to give you an allowance, Chris. You can spend it on whatever. You can get your haircut with it. You can do your gym membership with it. She's like, I'm just tired of all these little expenses coming out. So I'm just going to pay that to you. It's like less than 1% of what I make a month, but that's what happens when you're a guy. You take the small budget, give the wife the rest, right? And that's what she did. She's like, here it is. There's your allotment. You spend on whatever you want. Spend on your marathon racing, whatever. Just keep it out of my system, so I don't have to keep tallying up all your little charges that you do.
That works on an individual basis too, because it's those little charges that you kind of like forget that you made, or it's something on the spur of the moment. It may be coffee or something like that. And they add up
Exactly.
real, especially nowadays when coffee is
Yes.
almost $3 a cup. It adds up quickly and you can't forget, or you can lose the receipt or what have you. So,
Yeah.
yeah,
Yeah.
It's
actually,
kind of like
I
that
guess what
envelope
I'm
method.
saying is giving yourself an allowance.
Exactly. And that's what you're doing in each category, right? You're just saying you're going to put an allowance on these certain areas. And if it's spent, it's spent, and I get it. There has to be some flexibility. You can't be so rigid that if something unexpected happens, you can't
Right.
flex with it. But that's why it's so important not just to have that set and kind of know basically what you're spending per month. And if you've got extra that month because you didn't spend as much, carry it over to the next month, right? And so it all averages out. Even if you're going on vacations, I mean, plan for fun too. Plan for the things that bring you joy in your life. If it's, some people like golfing. I'm not a golfer. I'm the one finance guy that never does golfing, other than maybe mini golf sometimes, a little putt putt, but that's it. So I don't do that. But I do a lot of running. So those kind of things I'll spend money on. So just don't cut out all the joy in your life. Be responsible. Be a wise steward of your money, and then of course use the money for the things that you really do value and prioritize.
Yes, yes. So if people want to work with you, as I'm sure people listening, they need accountability because sometimes it's very difficult to get going with these type of things on your own. So you kind of need somebody that's like, did you do, so to speak. So how do people get in contact with you if they want to work with you?
Best way is you can go to moneyripples.com. That's a great place. You can go check out, see all the different programs we have to help out, support you that way. Even our podcast. We have our own podcast show, the Money Ripples Podcast. You can get on iTunes or even watch on YouTube. We got 2 YouTube channels, in fact, that we teach a lot of good basic stuff. That's all for free too.
All right, good.
So you started out giving us one tip. What are the 7 secrets to freeing up your cash?
Well, cool. I already revealed one of them, didn't I? So
Yeah.
tracking your money is the first step. Second one is, this is my mantra. If you're not going to use it, lose it. So getting rid of stuff, selling things, donating them. That's one thing I learned. Like so many people will say, oh, I can't park in my garage. I have too much stuff. Okay, well, see if you can get rid of it. If you're not using it, lose it. Sell it, make some money off of it, donate it and get the tax write-off, or just throw it out, trash it, or give it away to a friend or a family member, whoever it might be useful for, right? It comes back to that stewardship, so like my dad, he collects stuffed animals like crazy. Those little crane machines you get at like Walmart and stuff,
Yeah. Oh my.
the guy is a nut. I mean, and he's good at it. And so he literally had pulled out tens of thousands of stuffed animals. And these would, fill up our entire basement right next to the Mrs. Buttersworth that he bought on sale 20 years ago that he refused to throw out. Right.
Wow.
I mean, that's the kind of guy, a hoarder my dad is. And we're like, Dad, get rid of it. Like, even if it's just donating it, and so he eventually donated some to the local fire department or whatever. But I mean, he was going to sell some of them. He did it. And he always talked about doing something someday. And it got to a point where it's like, just get rid of them. And the crazy thing is when you don't do that kind of thing, just like what happened to him, a flood came in his basement, wiped out literally thousands of those stuffed animals, the ones that were on toward the floor. They went up to the 7-foot ceiling. So it was the ones on the lower level.
Oh my.
He still got probably a couple thousand left, but it just wiped them out. So that's the thing, is that if you don't use something, even if you don't get rid of it, sometimes just by natural consequences, something else will get rid of it for you. So get rid of stuff, find ways to sell it or donate it. So at least you get some monetary benefit. Another benefit is taxes, especially if you're a business owner. If you're not taking advantage by having a corporate type of setup, like an S corporation or something like that, where you can split your pay between owner draws and your salary. When you do it that way, you can save thousands of dollars a year doing that. There was one guy, it was a dentist that I ran across. His CPA told him, his accountant said, don't get a corporation. You don't need it. 2 problems with that. One, that's high risk, because if you get sued, that means they can come after your personal assets. You need to create a separation between your business and your personal life. But on top of that, he was losing out on over at least $30,000 a year in taxes, because he was making $300,000 a year that he was bringing home. But he was getting taxed, not just income tax, but for those of you that have you ever looked at your paycheck stubs, if you work a normal job,
Right.
you'll see on your paycheck stubs the FICA FUTA tax coming out, right? The FICA tax. Well, that FICA tax, I mean, even though it's gone down now, at that time was 15.3%. So when you're your employer and you're the employee, you pay both sides. Where, right now, if you're just the employee, you pay like 7%. So he was paying 15.3% on that 300,000 on top of income taxes.
Wow.
So he's paying over 45,000 a year. But I said, hey, what if we instead only set your salary to be 100,000 a year, and then the 200,000 you get paid as the business owner, which is like your owner draw. So you're not getting paid as a wage, you're not getting paid as the owner. Owners don't pay FICA taxes. They don't pay for your Social Security that you may or may not get down the road, right?
Right.
So do the math. 15% of 200,000 is $30,000 a year alone that he could have saved because his accountant was being a jerk. He was being an idiot. So things like that. If you have kids, you can pay your kids almost $13,000 a year tax-free. Pay it from your business. It's a write-off. But then you pay your kids and have them pay for their clothes, pay for their school and extracurricular activities, and do those things that you'd be spending money for anyways, but you don't get the tax write-off. Now you kind of get to pay it post-tax. They pay zero tax on their money, and it gets used for things that you would have had to pay taxes on anyways. Another one is the Augusta rule. If you know Augusta, Georgia, where they play the Masters Cup, speaking of golf, IRS made a rule. It says, listen, people want to rent out their house for a week or two whenever people come to town for the Augusta, Masters tournament. Let's give them a break. So they made a rule in the IRS saying that you can rent out your home 14 days a year and not pay any taxes.
Wow.
Now, once you rent it out for day number 15, now you'll pay the normal passive income tax you pay on rental real estate. But if you stop before 14 days, you don't pay any taxes. So what if your business, your corporation, rents the house from you personally? So for example, my company, Money Ripples, will rent the use of my house to do things like this, right? And or I shoot YouTube videos and things like that. So I'll set a day where whether I'm hosting clients or shooting videos or even just an admin day where I'm just doing a lot of work on my business, right? I'll pick a day and then pay maybe like once a month. And I found out here in Utah that there's a Marriott that I can rent out a small room to do the same thing with Wi-Fi and everything else available there. And I pay over $2,000 a month or $2,000 a day for that use of that Marriott. So that means I can justify paying about roughly $2,000 a day for my company to pay the use of this, my home office. And so if you do the math, times that by 12, that's $24,000 a year. I can pay to my, pay as an expense of my business, but I pay no tax on that money. So it's like $24,000 of tax-free income. That's huge. I mean, that for me saves at least $8,000, $9,000 a year.
Yeah.
So there's a lot of things you can do strategy-wise on taxes you could do. And I mean, there's things with debt. I mean, there's so many things you can do that obviously you can kind of see on the website there where we talk about some of those cash flow strategies.
Wow. That's interesting.
Yep.
Especially being able to rent your house out to your company. That's deep.
That's
deep.
And do it all legitimately, right? It's legit. It's not something that you just do willy-nilly and then you get audited. It's something that the IRS created for you. So why not use it?
Is that only in what did you say, Utah? Is that
no, that's
places?
nationwide.
Oh, okay. Yeah. Okay. So
almost any tax strategy you can do is across the US.
Oh, okay. All right.
very good. All right.
So if people want to really put that in place, can they contact you for like a step-by-step kind of thing? How to put that in place? Okay.
Absolutely. Yeah. And we're not CPAs or accountants. I'll say that as a disclaimer, but we do have contacts of great CPAs you can use that understand these things.
Oh, okay. Wow. That's interesting. I didn't know that.
I think one of the things that Ida and I say about doing this show is that we meet people and we're constantly being amazed, about what you don't know. I mean,
Yes.
who would have thought of, who knew about that except people like you, and there may be a few million other people, but I never heard of it. So this is a real eye-opener.
Yes.
I guess that's what I could say. We're always getting our eyes open to new ideas and new concepts. So thanks for that.
Yeah. And that's not even, we're not even addressing the main forte of our business, which talks about passive income, right? Like how do you create investment passive income so that you become work optional? You work because you want to, not because you have to, which is the seventh point, right? Is creating additional streams of income. And there are ways you can do it passively by getting your money working harder for you. Like I've got, I have one client in particular that, he retired from the military. He was lucky enough to actually have $1 million saved up. But the problem is his financial advisor told him that, like most financial advisors, if they've kept up with the times, you should only pull out 3% a year if you don't want to run out of money before you die. Well, do the math. 3% of $1 million is $30,000 a year. For a guy living in California, that he might as well live in a cardboard box, because
Right.
nobody can live in California for $30,000 a year, right?
Mhm.
And he's a millionaire. Think about it. You're a broke, poverty level millionaire trying to live on that. And so when he came to us, he said, listen, I know we can do better things. I just don't know what they are. And so we looked at things like anywhere from like rental real estate, where he doesn't manage the property, somebody else does the work for him, so he can buy it anywhere in the country. By the way, I even have a contact like in Southern Pennsylvania, for example, that has properties. I had he ended up buying into an ownership and with other partners into a apartment complex. He got into like oil and gas type of things where they get paid on the land and all the times they do all the drilling. So he's getting paid on that. And when all is said and done, he's getting paid about $11,000 a month or $130,000 a year versus just pulling out $30,000 a year with his financial advisor.
Right. And not only that, $1 million, that's not going to last very long if you're not turning it.
Especially with inflation.
Yeah.
Yes.
$1 million used to be a lot of money, but today it can go pretty quickly if you're not doing things to keep the flow going.
That's right.
Wow.
Well, it's like when I used to watch TV shows, like if you remember Benson or
Yes.
Mr. Belvedere and things like that, I thought if I had $1 million, I would have a Living Butler or Who's the Boss. I'd have my own Tony Danza, right? And no, none of that. Like having $1 million today just makes you middle class. That's how crazy it is with inflation. What's $1 million going to be like in 30, 40 years when they tell you, oh, million's a lot? No, it'll probably be something that even the average Joe will have down the road.
Yes, you're absolutely right. With inflation and everything going up and up, $1 million is not what it used to be.
No way.
It'd be like going to some countries and they tell you that it's 1,000 whatever for a cup of coffee, and you're like, that sounds like a lot of money, and it's not. It turns out to be like $1. So that's where we're heading if this continues. That $1 million, it'd be like, oh, $1 million. Oh, okay. I need 50,000 to fill up the gas tank.
That's right. Yeah.
Wow.
You look at a place like Venezuela, it's like that. I mean, even kind of as a fun joke or a gift idea I've done, like when I've done events, I'll give a thank you gift, $100,000 dong, Vietnamese dong, right? Their currency. Well, $100,000 is only worth like $50. It's not that much.
Exactly.
But I had one guy that spoke at my events so often. Eventually, he accumulated 1 million dong. He's like, I'm a millionaire. I'm a million dong heir, whatever that is. But it's like, no, you got a few $100. Congratulations.
Yeah. It's going to be that way. It's getting
And then what about the talk about the money being digital? That's supposed to be coming down the pike.
Sure is.
And I think that's basically the control, so that the government can see every penny we have. Whereas with cash, you can't always see that.
No.
So what's your thoughts on that?
Yeah, it's going to happen, right? Like you just have to know that that's going to happen. Even if it's a few years down the road, it's inevitable. I mean, they want speed, they want ease. And there's good of it. There's a good part of it from that. There's silver lining in the digital currencies. At least things can move a little faster. But for the most part, we're already kind of digital as it is.
Yes.
But the thing that worries me, of course, is that does that allow government to spend more, right? Does that allow them to be able to have more control over the monetary system and drive up inflation further?
Yeah.
That's a concern, like it's to me, like digital currency is not much different than paper currency, right? Because it's all kind of fake. This is why I've been that's why I've been ripping on crypto like Bitcoin and stuff, even for years. I mean, and I've made money in Bitcoin, but I made money when everybody else bailed. Like that's so when crypto would crash, I was like, okay, I'll buy a little bit just to play, just to gamble with.
Yeah.
Never to create wealth. And then The time you know that's bad to buy crypto is when your old high school classmates start saying, "Hey, how do I buy crypto?" Or "How do I buy a Bitcoin?" Like, where do you buy a Bitcoin? And things like that. When you start hearing the average American start asking about a certain investment, they say, "Hey, how do I buy more stocks or more Apple or whatever it might be?" That's the time to get out. Because that's once the average American starts putting in money, that's when the smart people pull out all of their money. And that's why most people lose.
Mhm.
So that's why I really don't trust something like Bitcoin. I mean, especially when you know the government, I personally believe that the government's been buying up Bitcoin so they can price control it.
Oh,
So
yeah.
that's why Bitcoin, after it took off and hit 65,000, now it's down around 30,000. It's not going anywhere. It's not really doing anything.
Right.
And everybody's like, "Oh, I'm buying it because I want to stick it to the government." Not if the government owns more than you do. Now the government says, "Great, it's in our control," and that's what they want to do. They want to control the U.S. dollar and everything else that's a threat to it. So
Yes.
I mean, that might sound like a conspiracy, but that's kind of what history has taught us: is that anything that tends to be a threat to the U.S. dollar, they try to find a way to,
Control.
make it null and void.
Yes, absolutely. Wow, Chris, this has been amazing. Your podcast, how do people connect with that?
Yeah. If you listen on wherever you listen to podcasts or watch podcasts, we're there. Whether it's Spotify or iTunes, or if you watch on YouTube, yeah, just look up the Money Ripples podcast and you'll find we've got like 725, 730 episodes or so. So you'll find it there.
Oh, all right. And if they want to work with you, how do they connect?
Yep, just go to moneyripples.com.
All right, moneyripples.com. That's very easy to remember.
All righty. So we know you're coming back too. I'm inviting you before Ida gets a chance. I want you to talk about being a one-man band or one-woman band, growing a seven-figure business as a solopreneur.
Yes.
Because our listeners are
love that.
solopreneurs. Yes.
Yes. So that's our next episode with you, because we need
That's
to
a fun
know
one.
about
That'll be
that.
a juicy one for sure.
Okay.
And I did that part-time.
Wow. So thank you so much, Chris. We appreciate you, and we can't wait for the next episode.
Same here.
Thank you for tuning in to Just Minding My Business Radio. I'm your host, Ida Crawford. We hope you enjoyed the show and appreciate you stopping by. Many blessings to you and yours.